It's the crypto coach here. Let me take you through 3 tips for creating your own trading system in the markets. Starting with tip number 1, data backed systems. This is absolutely essential because everything we do as a trader should be led by data, should never be led by our hunch or our bias because that's useless. It's not repeatable. But if you have something that is backed by data, so a system that's back tested in the markets, live tested in the markets, you have at least a better idea than if you hadn't have done that, if your system is likely to yield positive results. Nothing's guaranteed, but it sure is better than nothing, which, let's face it, 90% of traders, they dive into the markets without a system. So just by creating one, that is data backed, you are above the average trader, which is what it's all about. It's a PvP game. So when it comes to data backed systems, you need to understand sample size. Because if I gave you guys a profitable system, but it only had one trade worth of data, you wouldn't want it. That's statistically insignificant. Same with 20 trades. But if you have 100 trades or more, now we have statistical significance. It removes the chances for anomalies in the data to skew it one way or the other. So you need that big sample size, and it's losing that is actually what gives you your valuable data. Losing is essential to success because it's actually your losses that you pick up in the data that then tell you whether this strategy is worth taking into the markets live or not. So, having that data backed system allows you to reframe your mind and understand that if the overall system is yielding positive results, positive expected value, then the losses are just part of the data, which many traders trip up on because they get too in their head when it comes to losing in the markets. So, data backed systems solves that because you rely on your overall statistics and you need significant amount of data so that you can rely on it. So, when it comes to creating a system, every system should start with 100 back tests in the market. You have days, weeks, years, decades even of data on TradingView to go and back test your system on to see the overall expected value. All you got to do is put in the work, what most traders simply are unable to do. From there, you want to get a system that has an expected value over zero point 0.3 at least, in which you can take it into live trading where you're going to run into more costs as a trader, such as trading fees, potentially even funding fees, also slippage. These things all play a factor. So that's why you want it over zero point 0.3 in backtesting, because backtesting doesn't perfectly translate to live trading. So we take at least 30 live tests with $1 risk. And then from there, if it's still yielding positive EV, we deploy it with 1% trading portfolio risk per trade. Very simple, clear process. Guys, trading is simple, but simple does not mean easy. But for every system you create, this is the step-by-step blueprint to ensure that 1, you give yourself the best chance of success, and 2, you minimize the amount of capital you waste in achieving said success, because a lot of people overlook that second point, which is very important and can be the difference in making a real killing in trading to just being break even or even unprofitable due to the cost, your tuition fee in getting to that level of success. So, data backed systems, very important. That's the blueprint to it. Not the stuff that they teach really on YouTube, not the sexy stuff, but it's the real stuff that professional traders adopt. Tip number 2, no technical analysis is perfect. TA is only as good as the person using it. I've got some diagrams there to show you some examples of what some people's charts can look like out there in the market. And it comes down to a fallacy where it's a fear-based mindset if you're trying to combine loads of TA and find this magic system or find a magic indicator that's going to be profitable for you. The reason it's a fear-based mindset is because you're scared that if you do everything right in trading, you use TA, you use your systems, and you still lose, that you're just a failure. But the art of trading is having an abundance mindset and knowing that you're building the skill of building systems, and that skill's with you for life. So, yes, some systems, they may be profitable to begin with, and they may eventually have edge decay and lose their profitability. But as long as you know you've got the skill of building systems and understand you're going to constantly be building systems, you don't ever need to build the one perfect system because, as I said, systems have edge decay. The game is continuously building systems, having that abundance mindset and confidence that you can build continuous systems. You'll know that it's not about finding this magic recipe in the markets. It's never been about that. It's, again, about the skill of building those winning systems and technical analysis. It simply allows you to create objective rules so you can follow a repeatable, systematic approach in the markets. It's not magic. It's not useless. It's simply a set of tools. So that's the way to view TA. Allows you to actually build a system so that you can execute your ideas in the market, and it's nothing more than that. There's no magic recipe. Even if you build a profitable system, it's not guaranteed to be profitable forever. So don't have that fear-based mindset, trying to make something magical that doesn't exist. Instead, have an abundance mindset and be comfortable with the skill of building winning systems because that never ends as a trader. So the game of a trader is really simple, and this ties this all in. It's to observe, so identify a pattern in the market. If you've found something that you think is reoccurring, there is some pattern there, then your job is to systemize that pattern with objective execution rules, otherwise known as your trading system, so that you can repeat it over time and extract profits from it, therefore, and become consistently profitable. That's why we need it to be objective. And from there, we execute. If the system has positive expectancy, you deploy it live into the markets. And then we iterate, we learn, improve, further build our edge through the data we've gathered, or do deeper research in the markets to improve our systems, create more systems. And it's a constant cycle of observe, systemize, execute, and iterate. It never ends. So when it comes to TA, it's not about finding the magic indicator or the magic set of rules. There is no magic out there, guys. There is no super trend indicator that's going to make you profitable. This is what makes you profitable as a trader. It's mastering this cycle, which never ends. Tip number 3, effort versus result. So price action and volume combined can actually be very effective in turning any average trading system into a even more profitable trading system. And sometimes you can even turn an unprofitable system into a profitable system just by using volume combined with your price action concepts. So let's go through this quickly. Effort equals volume, result equals price. And you're looking for whether there is a harmony or divergence. So let me explain that. In uptrends, price is rising, making higher highs and higher lows. So you want the volume to be rising as price is rising if you are looking to follow the trend and go long in the uptrend to signal that it's likely to continue. Because what does it mean? Well, if price is rising and volume is rising with price, that literally tells you that there are more buyers stepping into the market at higher prices. That logically leads to the trend going higher because there's more effort going into the market and it's leading to a result of higher prices. So that signals continuation. And I've built a matrix here for you. So harmony is when you see high volume plus an impulse candle, so a breaker structure there with that high structure where you're then having that uptrend confirmed. That's where you can signal continuation is likely. But as you can see by the red arrow, as soon as you see price going higher but volume actually declining, so less people willing to step into the market and buy while price is making a new high, is a signal that potentially the trend is shifting and that there could be a reversal. Now, we always wait for price action to confirm that, but this is to show you how adding simple volume analysis in your trending systems or potentially your reversal systems can give you an extra edge potentially in your own trading system. You don't have to use it, but it's one of the best tools I've seen in the markets to really improve those simple price action systems just by adding that volume analysis. And in downtrends, it looks the same. So you get the breaker structures lower. When you see volume rising on each consecutive breaker structure, it signals continuation. You want to stay in your trend following shorts. It's only when you see volume declining on the next push down that potentially that's a signal that price is likely to reverse. So you may not want to be in your trend following shorts anymore, and you may actually want to deploy some of your reversal systems, or at least be looking for setups for reversals. So volume, that's how it can really give you that extra little edge in the markets. Those are 3 tips on creating a trading system. Let me know your thoughts and if you found these tips useful.